Yes, hello. Okay, so we were just having this conversation. I'm feeling a little low energy today.
And I'm
Amanda,
obviously not.
however, is on her treadmill. So, so we've got yin and yang.
We're
Yin and
always
yang.
the yin and yang. Even though we agree on so much, the way we approach it is so different.
It is. It really is. Um, this is my this is my motto for the day.
Uh-huh. And that's mine every day. That's mine every day though. But I feel like that makes me more relatable. I don't know.
Mm. It's well from now. Okay, so it's April 1st. So from now for the next 15 days, those WTFs are gonna come hurling at us.
Yeah, they are. And unfortunately, after the 15th, they're not going to end.
No, they don't stop,
So,
but that's okay. But it seems like right now it's like a barrage of them. So lots of fun, lots of fun,
yeah.
good times, good times. Okay,
Okay, what y'all
so
do for Easter? I didn't even ask in our like get ready call.
you know what? We didn't do anything because well they did Easter stuff at school, so they had their egg hunts and everything, and then the two older kids are just past all that, so it was just the little one, and he kind of really doesn't understand what's going on. So we were lazy and we didn't do anything. So
Did y'all like what'd you cook? Because you're quite the cook. So like even if it
I
wasn't Easter dinner, what'd you cook?
I we did have a pot roast and mashed potatoes and some vegetables. So we did have a nice Sunday style dinner. So it was nice. What did y'all do?
Okay, so our life is crazy. We have teenagers. We got them Easter baskets. Our baby is 14, and I just sometimes feel so bad that my baby is like grown. And so all of my kids got Easter baskets with candy, but we did not do the TikTok style Easter baskets where it's like extravagant. It was like dollar store candy. I mean, it was
Oh,
Walmart
okay.
candy, but whatever. We didn't go extravagant. No Stanleys, no crazy. My daughter's boyfriend got in an ATV accident yesterday, and so he's in the
Oh
hospital. We
no.
spent some time there, and we had brisket for dinner because it's Texas, and what else do you have for holidays?
Sounds good. I thought when you said you did the TikTok Easter baskets, I thought you were going to say that you did. Have you seen that one, the meme where the kids are grown and they get the laundry basket and it's got laundry soap and dish soap and like cleaning wipes and stuff? I thought
Okay,
that's funny.
that is the best gift I ever got at one of my baby showers was like a basket like that with kids soap in it, laundry soap, baby Q-tips, which I know you're not allowed to use Q-tips, y'all don't come for me, wipes, like the practical things. If you know the person, those are the most helpful things. That's all I'm saying.
It's not. Hey, if you want to send me a gift and you want to send me a basket full of cleaning supplies, please feel free. So
But no, if I'm allergic to them or if I can use that kind, like that's what I mean when you know
I
somebody.
I'm not allergic to anything, so please feel free to send me all the cleaning stuff. I'm perfectly happy with that. When
I'm
I
allergic
had my
to
kids,
everything. Okay.
well, when I had listen, so when I had my kids, my first one, way back in the day, my coworkers threw a baby shower, and everybody brought a box of disposable diapers.
Yes.
So until he was about 8 months old, we didn't buy diapers, and it was a blessing. It was wonderful. So it was cool.
No, it is.
It's really neat.
Okay. Heather's asking
Okay.
us for the link to YouTube.
Oh, we're gonna run the promo and I'll throw it up in the chat for Amanda to pop up or something, okay?
I'll do that.
All right. We'll do that. Here we go. Okay, so there's that.
Getting it done.
Here we go. Here we go. Here's the link for YouTube if anybody needs it. And welcome to episode 12 of the Down Home Texas Small Business Show. I'm Tammy Fisher, an exhausted enrolled agent.
I am Amanda Adams, a very, very excited and out of my mind CPA.
Yeah.
I mean, for
And
this
we
time
are-
of year, yeah.
Yeah, for this time of year. And so today we're going to talk about learning from 2023's lessons. Amanda and I had this conversation last week. I think we agreed you've either filed your taxes, you've gone on extension, or you're about to file or go on extension. So we're kind of at that time of year where you can look back and take stock of what's happened and maybe kind of take a breath and figure out what can I do better and how could I be better prepared going into this time of year next season. And to do that, it isn't just, hey, wait till the end of 2024 and scramble to get it all done again. There are things that you can be doing all year long.
Starting today.
So starting right now. So we wanted to talk about that. Starting now. So we made a list because we like that.
Because we're typical accountants, we're good at lists and checking the boxes. That's a tax return joke, y'all.
Yeah. We made a list. And for everyone that we go over, Amanda is going to crank up the speed by 2 miles per hour.
No, she is not.
Sprinting at the end.
No, she is not.
No, she's not. Okay. So, she's not going to sprint for us, unfortunately. No. But we are going to go. We are going to go over our list. So, what do you want to mention first, Amanda? You go first.
Well, I think that one of the big things that we want to point out is that this show is for businesses, and businesses have business owners. And so this is going to be very, very much geared towards those business owners. Some of it's still going to apply to individuals without businesses, but this show is very much geared towards those business owners, because that's the people we're trying to really help influence and get things on track for. So just a disclaimer with that. Yes,
we'll say that. And I want to mention too that brings me up to the subject when you say business owners. I include in that people like real estate agents.
Yes.
People who cut hair.
Yes.
People who cut hair and rent booth space. People who are considered self-employed, but maybe they don't think of themselves as a business owner.
But legally speaking, you're a business owner.
Yeah, in my mind, legally speaking, you are a business owner because you are in business for yourself.
Yeah.
So these tips are going to help you because they will. And I have a lot of my tax clients are these types of business owner people. So let's go.
Let's go. Okay.
Let's go.
So number 1 on the list, and I feel like this is always number 1 on the list, bookkeeping. Bookkeeping is so important. We can't stress that enough. You can't responsibly run your business if you are not doing your bookkeeping timely.
Right.
It's impossible.
Right.
So do your bookkeeping.
Right.
Bookkeeping. For the people who don't know, bookkeeping is literally recording the transactions that are happening in your business. It's recording the income coming in, the expenses being paid out. Payroll is an expense going out. It's recording your owner draw if you have to take it as a draw.
That's right.
It's literally just recording the ins and the outs of what's happening in your business.
Right. Right. And that can mean a lot of different things for a lot of different people. So I'm going to use a couple of examples. So for example, I have a client who has an HVAC service company, an HVAC company. Okay. His business is complicated enough that he needs to use a system to keep track of his revenue, income, and to keep track of his expenses. So he uses QuickBooks, very standard piece of software that a lot of people use, because he has almost daily, he has expenses to record. Weekly, he has income to record. And so to not keep it this way would be a lot of work on his part. He pays me to do it for him, so it's really easy for him. But if he didn't have this system to use, it would be a lot of work to keep it otherwise. Now, example B is going to be a real estate agent. She is getting commission checks, which don't come on a regular basis because she's not selling a house every week. She might sell a house every month. She might sell 2 houses per quarter. Real estate agents don't get regular revenues like an HVAC repairman would. So, and then on the flip side, her expenses are the same. She doesn't have regular expenses that she pays out every week or every month, because what are her expenses? Business cards, maybe some advertising here and there, some memberships, maybe some continuing education, because they do have trainings that they have to go to keep their license. So she doesn't have QuickBooks or anything like that. She keeps her revenue and expenses listed out on a spreadsheet. And for her, that's perfectly fine. And it's perfectly easy for her to do because things are so simple. Two completely opposite ends of the spectrum as far as a business owner is concerned with bookkeeping, both perfectly acceptable, but they do stay on top of it. And they keep it updated and they keep everything together in an organized way. Otherwise, if they wait to the end of the year and they come to me for tax prep, or they come to Amanda for tax prep, their expense for tax preparation is going to be significantly higher because we charge to put these things together for them.
Yep. It is much cheaper over the year than to be condensed to the few months of tax season.
Mm-hmm, mm-hmm.
We have more time and flexibility all through the year to do things. And so we don't have to charge those rush fees to get things done.
Right.
It's just a different cost. So
it's just a different cost.
If you're not investing in your bookkeeping currently, and that doesn't mean paying somebody, your investment can be your own time.
Mm-hmm.
If you're not currently doing that, number one, that is where you should start. But with doing bookkeeping comes its own set of problems, right? You actually have to know what you're doing.
Right. Right. And let's talk about that for a minute. And so let's talk about that. DIY bookkeeping. We're not against DIY bookkeeping at all. But the more complicated your bookkeeping needs are, the more you, as the business owner or the person who's doing the DIY, needs to be knowledgeable about bookkeeping and accounting principles. So let's talk about that for just a minute.
Well, okay, bookkeeping principles and legal principles on what your business requires. So sometimes those go hand in hand. So specifically, we're talking things like payroll. Does the owner have to
Yes.
take a check? Can they take a check?
Can they take a check, or do they just take a draw? These things are entity specific. So number one, a business owner needs to know what their entity is.
Yep.
Are they considered a sole proprietor? Are they a partnership? Are they an S corp? Are they a C corp? You need to know that.
At a very, very minimum, you need to know that.
At a minimum, you need to know that.
The answer, I am an LLC, does not answer that question.
Does not answer that question. An LLC is not a tax entity. An LLC is
illegal.
How do we answer that question? It's a legal. Yeah, it's a legal entity. Yes, it is not. It doesn't have a status when it comes to how you file your taxes. So what you need to know is, how do you file your taxes with the IRS? That's going to tell you what form you use. And the form you use is going to tell you how your bookkeeping is set up with regards to how you pay yourself as the owner, what those accounts are called. It's going to also dictate certain rules and limits that you may have.
Oh, meals.
We're going to get to that.
Okay, we're hungry, y'all. In case you didn't pick up, we're hungry. So meals.
I know. I didn't eat lunch.
It has a limit. But really, it matters if you know how to do things properly for your bookkeeping purposes. It makes our lives easier as a tax preparer, as a fractional CFO, as your advisor, as the person who is trying to help you know how much you're going to owe in preparation for tax season. If we can look at your books and trust that they are accurate, we can give you much more accurate advisory information.
This is true. And it also matters because we're going to go back to what we talked about just a minute ago. It also matters because if they're not accurate, we have to make them accurate before we can file the return. So that's more time that we have to spend working on the books before we get to the actual tax prep. And that's money that you have to pay us to get that part done. So if they're accurate to begin with, you save time, you save money. So do you teach people basics of bookkeeping or how to use QuickBooks?
I do. So
Okay.
I have had a few people who have reached out to me and they're like, I cannot afford for you to clean this up. I will allow them to work with me on an hourly rate. I record their call. We do it on Zoom. We're in their books, and I allow them to have a copy of the recording because it's them, and they can ask whatever questions they want. And then they can go fix things on their own. And so over a series of calls, that has been the most successful DIY, honestly. And I think it gives them a sense of purpose and really like they understand what's happening in their business then. Yeah. So I do.
I like that. I do that. That's the service that I offer too. It's one that generally not during tax time, but when it's not tax time, that's one of the things that I do offer, is to be able to come in and offer tutorial sessions where we work together in your books. You get to record the session, and then we kind of go on from there. Now Heather is asking a really good question. I'm going to pop that up here because I have an answer.
I do too. Okay. So how trustworthy is the advice you get from QuickBooks Help in terms of how to enter expenses and such? Our current accountant isn't very responsive with inquiries like this, so I depend on QuickBooks Help to try and enter things properly. Tammy, I'm going to let you go first, and then I'll give my experience.
Okay. In my experience, and I hate to say this because I use QuickBooks, but I hate to say it, they're not very helpful. I am working with a client right now who has come to me, and she's what we call a single member LLC. So she's considered a sole proprietor. Her books are set up as if she is an S corp. So now, luckily, they haven't had her taking payroll, so I don't have that to worry about. But her chart of accounts is set up as if she is an S corp and a shareholder, which is wrong. And then one of the other things that they have is they have vehicles set up as assets on her chart of accounts with loan payments broken out as principal and interest. She is not the owner of the vehicles. They're not titled to her at all. They're completely in somebody else's name. So yeah, and I mean, she's made the payments, but they're not hers. So I have to take care of all of that and clean all of that up so that we can file her taxes properly. Because she's not allowed to claim these as assets. She can't take the depreciation on these vehicles. They're not hers. Okay. We have to do things differently there. And she's not an S corp, so her chart of accounts needs to be reworked a little bit. And all of this was set up by QuickBooks. So that's my story. And that's just one out of several that I have.
Mine is similar. In terms of your question, though, I want to kind of make 2 points. If you are asking how to physically do something in QuickBooks, I do believe QuickBooks support can be very, very helpful in the workflow process.
Okay.
So if you are asking, how do I enter an expense? And they tell you, click this button, click this button, click this button. I do believe they give you very helpful information. However, if you are asking for something that would be requiring any type of, not to be ugly, thought behind it, they are not helpful. They are not CPAs. They are not enrolled agents. They may not have any experience at all other than reading a script at QuickBooks. And so my experience, I had a partnership and the partners put themselves on payroll. And partners are not supposed to be on payroll. This is, an issue. And so I tried to take them off of payroll, and I had to fight tooth and nail. I had to get the IRS regulations and get kind of ugly with QuickBooks to get them to take the owners off of payroll, because they told me that I was wrong. I didn't know what I was talking about. And I did know what I was talking about. So I think that it depends on what you're asking for from QuickBooks, if they are helpful or not. QuickBooks, it would not be helpful on what type of expense something is, on whether it's an asset or an expense. They're not going to be helpful on those things. However, if you know it's an expense, they can be helpful to teach you how to input that expense. So depends on what you're seeking, Heather. I hope that helps.
Yeah, and I just I popped up in the chat. Well, and I don't know if she can see that or not, because I don't think it posts to LinkedIn. So I might have to have you put it in the LinkedIn chat. Some really good tutorials on YouTube that you can watch for QuickBooks help are posted on channels by Hector Garcia and Victoria Wasek, Wasek. They are really, really good people to follow, and have really, really good info. They're known for their QuickBooks tutorials.
I've watched Hector.
So, yeah. Good question, Heather. Thank you for asking that. Thank you.
Okay, so do we
So-
want to jump into? I know we have those 2, 3, 4, and 5. Those are kind of some advisory tax planning e-services. Do we want to hop into those?
We can. Sure. We
Okay,
can.
guys, these are things people pay big, big money for. I'm just going to tell you, we are not going to give away all the goods for free, but there are things that you can be doing to lower your taxes throughout the year. That is called tax planning. And there are very, very common things that you can be doing that people don't realize constitute tax planning.
Right. So, so number 2 that I have on my list, tracking mileage. Yep. Tracking mileage. I have a lot of my clients, ask about mileage tracking and the best way to do it. There are so many apps to choose from these days. I'm going to recommend that you use one. Mile IQ is probably the one that's at the top of my list because it's really easy, and you can download it on your phone, which probably goes everywhere with you, and use that. But accurate mileage tracking is going to be your friend, and it's going to get you the best deduction possible. And even if you are taking actual expenses, we still, as your tax preparers, are asked for the mileage numbers on our software. So we're still going to come to you and ask you for those numbers. And I really don't want you to make an estimation. So.
Oh, those big round numbers. Everybody traveled 15,000 miles last year.
Yeah. And a lot of times people, they just don't understand, well, why do you need my mileage? I'm taking actual expenses. Well, I get that, but the software asks for mileage numbers anyway, because, and let's just to talk about that for just a minute. Unless you are in an industry where it's common for you to have a work truck that is 100% business use, the IRS knows that you're combining personal and business. They're not dummies, okay? So they're going to look at your mileage numbers. They want to see overall, what is your breakdown? And we need you to be accurate about those numbers because we have to report them. So use an app. It's easy. I mean, even I use an app for my mileage because it's not common for me to have mileage because I don't travel a lot when it comes to my business, but occasionally I do. So I keep track of that mileage because I know I have to turn it in. So,
a conference or whatever that you may be going to, that is so helpful.
It matters. It does matter. And I also want to mention this because I saw it posted earlier today on one of our lovely social media groups. Someone asked the question, and you might have seen this one. Someone asked the question, if I'm taking a mileage deduction, can I still claim an expense for my oil changes and my repairs? And some people were answering yes, and that is not true. You have to choose mileage deduction or actual expenses. It is one or the other. You cannot do both. Not both.
And you can't change back and forth, and you can't.
And you can't change back and forth on that vehicle. As long as you have it in service. You can change if you buy another vehicle. And that's the one you have listed. So, but when you list that vehicle on the tax return, you choose one or the other, and that's what you have to stay with. So, there you go, people.
Number 3 on the list. This one is not tax planning as much as it is just do it. receipt capture. Okay, guys, if the IRS comes a knocking, they are looking to you to substantiate the expenses and the income that you've put on your return. And so one of the ways that you can substantiate those expenses is by your receipts. And I want to be clear, receipts can be helpful not only in an IRS audit, they're also helpful in like a sales tax audit. If you don't have those receipts, so what they start doing is they pull a sampling of receipts, and if they see any mistakes, then they extrapolate that number and they quantify it based on what they think. So if they've requested 10 receipts and you have mistakes on 5 of those, they are saying there's a mistake on 50% of your receipts, and they take that 50% and then they like quantify it against everything else. Do you guys see how that's problematic?
Yes, right, right.
Okay, on this, Tammy, what are your hesitation with receipt captures? Do you have any?
Well, I mean, you have to use it for one.
Oh, yeah.
You know,
but
so
two, some of them, if you don't continue paying for the software, you lose access to all of your receipts. And so
true.
If you, for instance, and I'm not trying to scare anybody, this is not a QuickBooks bash fest. I want to be clear. But one thing with QuickBooks is if you're uploading all of your receipts to QuickBooks and then you choose another software and you take that information from QuickBooks to the other software, your receipts do not go with you.
That's a good tip.
So be very, very mindful.
Very good tip.
Of the software, and if you are changing softwares, don't lose your receipts. So that's my fear with receipt capture. That you
that's
need
a really good tip.
You have to have it for 7 years. You have to keep documentation for 7 years.
That's a really good tip, Amanda. Thank you for that, which leads me to think about things like with a Google Drive or a OneDrive or a Dropbox. Those are things that a lot of people use anyway.
Yep.
They're probably not as detailed as a specific receipt capture software would be. But you could, depending on your habits, you could make, say, a Google Drive specifically for your receipts. And then within that Google Drive, you could create different folders for the different vendors that you use on a regular basis. So if you're a construction company, you could create a Google Drive specifically for your receipts and then create subfolders for Home Depot, Lowe's, all your gas, all that stuff. And then just use your Google Drive to sort your receipts. You could put them you could sort by month. You could do all of this. And then that data stays yours for as long as you have that Google login.
So what we're going to tell you is make sure you have it in at least 2 places. So have a physical copy and some sort of other copy. Have an electronic copy and in your accounting software. I don't care which 2 you choose, but have 2, because if you only have a physical copy, what happens if your building catches on fire?
Right.
Flood.
Right.
Tornado. So you do have to worry. And yes, you can have huge damages like that, and the IRS or the state can be understanding, but they still use that extrapolation method to determine how much they think there's a mistake.
Right.
So just be weary. That's right.
And what if you have a client who comes up and says, well, I'm not necessarily keeping the receipts, but But it's on my bank statement. It says that I went and bought, it says I went to Home Depot and I made a purchase.
But it doesn't say whether that purchase was materials. It doesn't say whether it's plants. It doesn't say, it doesn't say what it is. And yeah, you can track it back down at Home Depot, possibly. But why would you be wanting to do that in the middle of an audit? That looks
right.
And this goes back to what Tammy and I say a lot about being a responsible business owner and not making it a hobby. Why would you want it to look like a hobby business to the IRS? Mm-hmm. Why would you want to have to be chasing those things down after the fact?
Right.
Because they're going to look at you and go, are you really doing this?
Right.
If you're missing a few.
This is just CYA. And you want to do that. For sure.
Okay, back to tax planning. Tax planning is fun. It can be fun.
It can be. It can be. So I want to talk for my number 4 was about home office deductions. I want to talk about that for just a minute. Because this year, first of all, this year, I had a lot of clients who didn't realize they were eligible for the home office deduction, number 1. So here's the thing. Basically, if you are a business owner or self-employed and you don't have a storefront or you don't operate from a commercial location, you may be eligible to take a home office deduction.
Home office deduction.
Now, there are some rules about the home office deduction itself and what can be taken. You need to be using a room of your home exclusively for the operation of your business, for the admin tasks and that sort of thing. And we talk about that. And there's a calculation that goes with it. But what I want people to understand is the list of items that we ask for to calculate the deduction. So that you know this and maybe have them already put together. So it saves you some time.
Yeah.
To do this. So
okay, let's name as many as we can.
Yeah. So here's what we ask for. I'm asking for the square footage of the space you use for your office. And I want to know the square footage of your entire home. Okay.
To know what percentage.
That's how we get the ratio for your home office. Then I want to know your annual totals for how much you paid in rent or how much you paid in mortgage interest if you own your home.
Not mortgage principal.
Not the principal, only the interest. I want to know how much you paid for property taxes. I want to know how much you paid for a homeowner's insurance. I want to know how much you paid for utilities to operate your home. All utilities, gas, water, electric, trash, internet, because you're using your internet to probably help operate your business. Those are the big ones. And it is, and surprisingly, when we get to this part of getting your taxes ready, a lot of people don't have those answers. And it's causing us to wait at least several days, sometimes as long as 2 or 3 weeks for them to get these numbers to me to finish this tax return. So you can have this ahead of time and be prepared.
Okay, couple other expenses. Janitorial expenses.
Okay.
Security.
Security is a good one.
Security system, you can. You don't get
HOA dues.
Yeah.
Yeah.
So, I mean, really, all of the things. Some repairs and maintenance. Now, let's talk repairs and maintenance versus improvements, because those are not the same. So you can take repairs and maintenance, but you cannot take an improvement made to your home.
So what's an improvement? A new roof?
An improvement might be Amanda's redoing her kitchen
Right.
and I'm buying new cabinets.
Right.
That's an improvement to my home. That is
Okay.
not a repair. However, I have a little small table over there. If it breaks,
Mhm.
I might have to get it
Mhm.
repaired.
Mhm. Right. I have a leak.
Yep.
When it rains, I have a leak in the ceiling over my desk.
Yep.
So I'm having the drywall repaired.
Yep.
That's a repair. I have a leak, so I'm having my entire roof replaced.
Nope.
That's an improvement. Okay.
So just want to be clear. Those
Okay.
are a couple
So
other
it's
things,
different. These are things.
but they're different.
Yeah, these are different.
Okay.
Should we talk a minute about estimated tax payments?
I think we should. I think,
Okay.
and not that we're running out of time, but I think estimated tax payments are so important that we have to stop and like put this into words. I don't know.
Into
Put
words.
it into practice, guys.
If I had to say one thing about estimated tax payments / self-employment tax, this is what I would say. It is important for you to understand the difference between self-employment tax and income tax. They are two different taxes. Okay?
Even if they're reported on the same form.
True. So when you file your income tax return, your 1040, self-employment tax and income tax are both reported on that form. If you have made no quarterly or estimated tax payments for that year, and you are self-employed or a business owner who takes draws, owner draws, chances are, if you have a profit on your business, chances are you are going to owe taxes. And chances are that's going to be a combination of self-employment tax and income tax. Now, in some cases, and in my experience, many cases, the self-employment tax portion of what you owe is more than the income tax portion of what you owe. And I spend time explaining that. It can be more or equal to.
I think it's the more shocking piece.
It's shocking to people.
It is
how much of that is self-employment tax.
It is the piece that people don't see coming. So
they don't see it coming.
When you hear people talk about taxes and they talk tax brackets, and we are on a graduated tax system, so the more money you make, the more taxes you pay on the higher chunks. Okay? And so what people anticipate is at over 400 and something thousand, you pay 37%. Okay? So what they're expecting is to pay 37% on that chunk of money. But what they haven't taken into consideration is the self-employment portion of that, because the income tax portion is 37%, but the self-employment portion is not. It is an additional amount on top of that 37%. And then if you are in a state that taxes it, thankfully Texas for the most part does not, it is shocking to people because they think that 37% is all inclusive. So that's what I find mostly with clients, is that they're shocked that it's not an all inclusive.
Well, or I find that we'll get to the end of the year and we'll be ready to file, and a client will say, well, I'm not going to owe anything because I made my quarterly payments. Well, may or may not be true.
It depends on if you. Okay, hold on. Now we need to also point out estimated tax payments are based on last year's numbers.
Based on last year's number.
If you've made a significant amount more this year, those payments do not cover.
They do not cover.
If you've
this
made
is
a
true.
significant amount less, you've paid in too much.
This is true. And this is true too. If you've made your quarterly payments, but you only paid in 15%, you've satisfied most of your self-employment liability, but you've paid nothing toward income tax. So there's some education that has to go on here. If you don't understand, hit one of us up. We're happy to walk you through this and explain this. This is something that during the year, tax planning and advisory services will help you with. Mm-hmm. If you're making money, if your business is making money, this is something that can really help you when it comes to tax time, because making those quarterly payments can really save you from sticker shock.
Yep.
And I will, and this is something that I tell all of my clients: when it comes to self-employment tax, you will pay it. You will pay it quarterly throughout the year, or you will pay it all at once, but you will pay it.
100%.
Yeah, you will. There's no doubt about it.
So this is where we're going to put in our obligatory, if you are not working with an accountant who is willing to discuss these things with you, who is willing to sit down and teach you the things that you need to know, you may not be working with the right person. We are not saying, hey, come work with me, but we are saying make sure that you have all of the information to make those informed decisions. That's why your bookkeeping is important. That's why all of the things we're telling you is so important. Mm-hmm. So we're not saying don't come work with us. However, we are telling you, if you feel they're not listening to you, they don't answer you, it might be time to start looking. And this was also one of our highlights that we wanted to talk about. When is the time to start looking? Mm-hmm. Timmy, are you accepting new clients right now?
I actually am accepting new clients. However, we're not filing any new clients before April 15th. So if you need taxes filed for 2023, you're going on extension. And we'll pick you up after the deadline. So and you're not going to get an appointment with me before the 15th. I'm sorry.
I'm not sorry. If you are just now looking, it's not me, because I'm not that kind of person. I don't want somebody else's emergency to become my fire, and I won't do that.
Yeah.
So when is the proper time to reach out to Tammy or a new accountant?
Probably after April 15th.
Oh, maybe you are too nice. You can contact me after Memorial Day. You can contact
after Memorial Day. Okay. Well,
hold on. Why? Wait. Why? Because of Texas franchise returns.
Oh, okay. So I've got some of those too.
You have to do a franchise return.
Franchise return, and it's due in May.
And
those are going to be due in May.
I know people don't talk about that enough, but we go from a March deadline to an April deadline to a May deadline. And so do not come to me until June.
Mm-hmm. Well, there's going to be a deadline no matter what. We're always coming up on something. I will say, if you hit up my book a consult link on my website or on my LinkedIn, you can pick a date. We can talk. Whether or not we can get you in is another story. So I'll do my best, but
I won't.
I'll do my best, but
What can you be doing?
you have to be
right
flexible.
now.
But what you can be doing right now is you can be doing your due diligence, and you can be researching. You can be visiting different websites and LinkedIn's, and you can be asking around for referrals, so that you can find the right fit for yourself. If the person that you're using now isn't somebody that you want to be using for 2024 and beyond. So
Yeah. Another obligatory. This is called vetting your professional.
vetting your professional, and we highly recommend it.
You see how different Tammy and I are in terms of like, I'm very strict on the deadlines. So I'm not very flexible with my time away from my kids and my family, and I won't make it my emergency. Right. Tammy is much more flexible. That is a more flexible personality trait that may work for some and may not work for others.
It may.
And so I'm very open with it because I don't believe in bait and switch. That's why I say it so vocally and so loud and proud. Because I don't want somebody to come to me tomorrow expecting me to get their return done.
Right.
Not going to happen.
It's not going to happen. It's just not going to happen. No. It can't happen at this late in the game. It can't happen.
But I don't know. There are those $125 tax preparers still getting tax returns done.
Well, good. More power to them. More power to them. That's what I say.
Okay, guys. That's a tangent for a different day.
That's something for a different day. But
vet them. Vet them for personality. Vet them for price. If price is a sticking point for you, you might want to know how much it costs. Do your due diligence. Do they work with the type of business that you are? Right. I work mostly with construction companies. I might not be the best person to work with a school.
True. And I work mostly with small businesses and sole proprietors. So I may not be somebody that's a great fit for you. But between the two of us, we have a whole network of accounting and tax professionals that we know. So you never know. We can probably send you a name.
We do pass referrals.
We do pass referrals on. So
read reviews. Okay.
Yeah, read reviews, ask around. This is a good time. It's starting to be a good time to ask around. So another thing that I want to make sure that we mention to people before we leave for the day is the ever lovely BOI report. The BOI, what did we decide that means?
I think it's beneficial owner information.
Beneficial ownership information.
Yep.
Beneficial ownership information reporting. Okay, so this is a report that is being filed to FinCEN. FinCEN is part of the Treasury Department. It's part of the Treasury Department, part of the government. It's not the IRS. Okay, Let's get that very clear. The BOI report has to do with identifying fraud, identifying money laundering. If you are registered as an LLC or better, so LLC, S corporation, C corporation, partnership, those type of entities, you are required to file the BOI report. Now, when you file it is determined by when you came into business. Okay. If you if your entity was, I'm reading this straight from the BOI website. If you are in existence prior to January 1st, 2024, you must file your report by January 1st, 2025. So you have all of this year to get your report filed if you were in existence before 1/1/24.
Mm-hmm.
Now, if you're a new entity that was created after 1/1/24, you have 90 days to file your BOI.
Mm-hmm.
90 calendar days from the date of your creation or registration. Now, who files the BOI?
Owners. Well, actually,
The
lots
owner.
of people do. Some attorneys will, some accountants will. I
Yeah.
will not. Tammy, I think you're
Nor
not
will
doing
I.
that for clients.
No, I'm not doing it. Amanda's not doing it. I think for a lot of us, it has to do with our insurance coverages. It has to do with our errors and omissions insurance providers. They won't cover that. So you have to ask around if it's something that you don't want to file for yourself. But you can file it online. You, as the owner, can file it yourself online. You can go to fincin.gov/BOI, and all of the information is there. fincin.gov/BOI. All of the information is there. They have an online reporting system for you to be able to file. So this is something that has to be done. So you can
So get it
file the
done.
report. So get it done, and you can wear your tinfoil hat while you file it if you wish. But please file it.
Yeah.
Yeah.
Super important. These small things that you may not realize that you need to be doing can lead to big consequences.
Mm-hmm. Yeah. We want to make sure that you get that one done. Okay. So what else? What else?
Lastly, can we talk about
Yes.
knowing their financial reports? So, knowing how to read your financial reports, knowing what a financial report consists of. When I say financial reports, do you know that that means your profit and loss? Some people call that an income statement. Some people call that a P&L. Do you know that all of those are the same things? When I say balance sheet, do you know that that's a financial statement? Do you know what a balance sheet is? That it is what tracks what you own, what you owe, and how much equity you have in your company. Do you know which one rolls over and which one starts fresh every year? Those are very, very important things for you to know and understand. If you are a certain type of business entity, your balance sheet has to be put into your tax return. And that's one of the ways that we verify that nothing was changed in the prior year in your accounting software. So if you ever hear your accountant say, well, this didn't roll, it is one of the most infuriating things because it means you changed something after the fact. And we now have to track down what that is.
Yes. Yes. Hallelujah.
I mean, just knowing those small things can be really, really beneficial for you. Not even in running your business. I mean, it's helpful, very important to run your business. But on the terms of what you should know, those are things you should know.
Those are things you should know. And that's also another, another vote, let's say, in favor of paid tax preparers.
You know,
when it comes to being one of those types of entities who has to fill out the form with the balance sheet on it, or you have to fill out the Form 7203 where you have to talk about what your basis is. If you're trying to self-prepare, those forms are really difficult. I believe those forms are very difficult for the self-preparer. So, just saying.
And if there is something on your tax return that doesn't match your books, do you know what a book tax difference is?
Yes.
There are standard things that are going to be a book tax difference until you put it on your books. There are things that happen on your tax return that you cannot put into your books without doing a little magic journal entry. And if you don't know how to do that, your books will never roll.
Yes. Yep.
So just a small thing.
Just a small thing. It may be, you might not be at that level now, but hopefully maybe one day you would be, right?
But even if you're not there now, you need to know that it exists.
You need to know it exists. So I think that maybe, hopefully, this has been a good knowledge lesson for some people out there.
And if y'all have questions, really, let us know what you want us to cover in more depth.
Let us know what you want to cover. Let us know if you've got some subjects that you want us to get to let us know if you have some subjects that you want us to devote an hour to. We'd be more than happy to do that.
Yep.
This show is for you, the business owners, the sole props, the taxpayers, the people that are out there who have the questions. That's what we're doing this for, is to get information out to you so that you can do better and be better.
Not be a statistic of those companies that close.
Yeah. And that's what this episode today is all about. Doing better in 2024 and not making the same mistakes as 2023.
Yep.
So, I know I made some.
Me too. But before we close, we want to invite everybody back in 2 weeks, and we're going to ask that you bring a friend. In 2 weeks, it will be deadline day, and we want to share our wins on deadline day. So for accountants all around the country, it will be that it is deadline day. But we want to hear the wins that are happening in your lives, in your businesses. And we want 2 weeks from today to be the episode of celebration.
Yes. April 15th, we are going to be here on Tax Deadline Day live for 1 hour. So I know that sounds difficult, but it's just 1 hour. So if you are in the tax biz out there and you're watching today, we want you to let us know so that we can pop you the link. You can pop on live. We want you to bring us your win, announce it to everybody, and then you can pop back off and you can go right back to completing returns. But we want the whole,
not just tax preparers, not just accountants. We want our clients, our
everybody,
clients, our business owners. So if you heard today's episode, Heather, we would love for you to come on and tell us about some of those pieces of information and how you've put them into practice or something along that line. I mean, it's going to be a great day, but we really want to end tax season on the high of an encouragement.
That's a good, I'm glad it's Amanda's idea. I'm going to give you all the credit, 100% credit. And I'm glad that you thought about it, because of all days, I think that's going to be the day that we need to have everything positive.
Yes.
Everything positive. So I would like to see that. So be watching for that one to be to come up and be promoted. So
we are so excited.
all right.
Well, I'm excited. Y'all have a great week. We are so thankful that y'all hung out with us for as long as you did. And
yes, thank you guys.
I mean, I think I'm done talking now. It's been a long hour.
I know you've been walking that entire time, and I've been watching you walk. And now I don't know about you, but I am starving. I'm gonna go find
Same.
something to eat.
Me too.
All right. I'm gonna go find something to eat, and we will see y'all on the 15th for Super Positive Tax Deadline Day.
Bye, y'all.
Okay. Bye.